May profits be upon you. How are you doing? I hope you're doing well. All right, we're going to take a look at US dollar index right now. Why do I always look at the US dollar index? Because it is the it is the currency, the global currency of commerce, okay? And a lot of the majors, all the majors include the US dollar. So it's it it is a lot hinges on the strength or weakness of the US dollar in the global economy, right? Now, let's take a look at the RT money meter. The RT money meter tracks the rate of change of each individual currency futures. We're looking at the currency futures, the individual currency, over a period of 15 weeks. And I update this list every week to see what the weekly progress is or decline. All right. So, and I rank them. All right. I rank them. This week's update shows that the US dollar has come back and reclaim the number 1 spot that is held for months. And last week it went from 247.2 this week to 425. That's a pretty nice push back up. It never broke the bullish trend. If you've been watching this channel, you already know that I've been tracking the US dollar. Yeah, it was just in retracement when it was you saw the decline, but it was just a retracement of an impulsive move, and that's the way the market moves. So I knew it was a short-term thing, right? And this week at the number 2 position is the Swiss, 325 last week, 305 this week. It's just kind of a marginal move down, but it's kind of moving sideways right now. All right, and look at the CAD. The CAD shot up to the number 3 spot, but it didn't gain strength. The CAD was last week at number 5 at 0.46, kind of bullish neutral. All right, and this week it's still neutral, but now a little negative neutral, but it's just neutral, folks. All right, the number 4 position is held by the Aussie. The Aussie slid down from minus 0.62 neutral status to minus 278. All right, the New Zealand dollar, which was number 3, did the same thing from minus 0.22 last week to minus 3. I meant to say 0.22, not minus. All right, and this week is at minus 378. All right, both of these slid down, took a hit, right? They are trending in the down direction. So we're going to look at these. There's going to be some interesting matchups this week. Here is the monies. Here are the money bottom 3. The money bottom 3. Pound, yen, euro. I'm definitely going to be shorting against these pairs with pairing them up with the stronger currencies. I'm going to be looking at pound, which is at minus 417. Last week it was at minus 358. Right? Yeah, it moved up in the rankings. That's because, but it's and we had I mean, you can see that it kind of slid down the other side, though. It's trending in the wrong direction. It's trending down, but it moved down. But that's because the yen at minus 686, minus 286 last week to minus 452 this week took a nice step down and a big step down, and pound also. Not pound, euro also at minus 282 last week is at minus 485. These 3 slid down, trending in the wrong direction, and I want to put them up against the ones that are trending high. So I'm definitely going to be seeing pound USD, USD JPY, and euro USD for sure, and then I'm going to pound them up. I'm going to pair them up with the Swiss also. So let's take a look at the US dollar index. All right, this is the weekly chart. Excuse me, this is the weekly chart. But before I give you that weekly chart, I want you to see that the COT report. I can make this a little bigger, can't I? Come on, man. Yes, I can. All right, so you can see it. All right, as of the 16th of last week, the banks are 80% long in with the US dollar index. All right, 80% long with this currency. All right, they opened 44 long contracts, and they also opened 720 short contracts. All right, but they're 80% long, folks. They are bullish, and you can see why. All right, let me get this back down. All right, and also I want you to also acknowledge that come Thursday we're going to get GDP news. All right, that's going to be important to see, and so you don't want to be. That's going to be high impact news. All right, you don't want to be in a new trade, especially if you're trading intraday. All right, on Friday we also have the Fed chair speech. He'll give you indications, hawkish or dovish, as to what is to come with the rate hikes and all. Important stuff, okay, that can move the market a little bit, so be careful when you're trading. All right, so we're looking at the weekly, right? What I want you to see in the weekly is that we are at a weekly area of supply. All right, and we are very bullish. This is a very bullish leg. We just broke swing structure here. All right, for this time frame, we broke that swing here. Now this high and this low is actually swing structure. The inside here is internal structure, but for the weekly, we're making higher highs. All right, higher highs. We broke structure to the upside. All right, that's all you need to understand. All right, don't get caught up in labels. All right, things are bullish here. We broke structure to the upside. That indicates probably we're going to continue to go higher, right? And I want you to see that. Let me get this. All right. I want you to see that price is gone past the median threshold of this weekly zone of supply. It's letting me know that price is working its way through it and will probably take this zone out. All right, and you can see inside we are at a daily zone of supply. All right, we're probably going to get a reaction here, maybe some short-term weakness. All right, just a pullback, but I just need you to acknowledge that this is a very strong weekly trend. All right, and on the daily, we can see that we had a nice break of a structure here. All right, a pullback, a break of that high, that structure. All right, another pullback. All right, now whether you have this as a major pullback, or, you know, like a swing pullback or not, doesn't really matter because it was broken anyway, broken to the upside. So we have strong bullish momentum. Now we have an impulse, and we have had this correction. This correction came right around between 705 and 786. All right, on the Fibonacci retracement tool, this is the best price you're going to get for a buy. All right, when it goes past 786 on the Fibonacci retracement tool, it usually means it's going down the other way. So this, you got the very best price for buys here, right? And this demand zone, the daily demand zone, held and pushed price up. That's great. You see the break of structure, the internal break of structure to the upside, indicating further bullishness to come, right? So everything's looking bullish. We're at this daily zone, and what I want you to see is we may get some pullback here because this is a demand zone. I mean, a supply zone within the supply. So we might get a little pullback here, and that's not to, you know, to bring anybody into a panic. All right, just understand that you know, price moves up, higher high, higher low, or whatever, and there's always that pullback. All right, let's go to the 4 hour. All right, this is where we make our money. All right. Let me get this here. How do I do this? All right, there you go. All right, and we can take that off and we can put this on. Okay. So what do we have here? What I want you to see. What I want you to see is in this leg of structure where we see all of this bullishness, all right? We had a break of internal structure, and what I want you to see is that we broke through this supply. All right, we broke through this supply. What does that usually mean? As soon as it breaks supply, I'm coming down here to mark the demand that is responsible for that. Because if price comes back here, If price comes back here, this is going to be a high probability trade to the upside. All right. And this retracement would make sense. All right. With this impulse, a correction either to this zone or to this zone makes sense. This would be a more profitable one because it's giving us a better price. All right. But it may only come back to here. Why? Because I see a demand zone here, and we broke this supply here as I have it illustrated. So it could come back and test this. These are supply to demand flips. Supply to demand flips. This is we may catch the flip here, all right, or we may catch the flip here. I'm looking at both of these zones. If it makes it through this one, I'll be waiting for it here. All right. In the meantime, do I recommend shorts? I don't recommend shorts. I don't recommend shorting the US dollar. But if you want to take a day, an intraday trade, all right, make sure you're trading on the 1 minute, 5 minute, 15 minute. All right. You can catch this short from up here. If it starts to pull back, you can catch this short. Look for a confirmation here on the 15 minute and wait till it pulls back, and you can do your thing. All right. You can take this short. All right. And if the only way I would take a short if it takes this one out for me. All right. I would look for this on the 15 minute. All right. As soon as it breaks that, I'm going to the 15 minute. Why? Because I'm looking for that short, that the supply that is responsible for taking out this demand. And then I would take that short down here. Yep. That's the way I would do it, because if it breaks this, I believe it's coming down here. Okay. Does that make sense? I hope so, because we're looking for it right here. We're looking for it right here to take a higher probability trade to the upside. All right. I'm not trading the Dixie. I only use it as an indicator for me for the major pairs, because I think we're going to be coming up to this zone of supply. Okay. That's it. That's it. I don't want to confuse you any more than I already have. Okay. I'm hoping that you enjoyed this video. Please make sure to slap that like button aside the head. All right. Hit the like button, and make sure you subscribe to my channel. All right. Because it helps the YouTube algorithm. It helps me grow this channel. Okay. And do leave a comment. Let me know, do you appreciate the US dollar index analysis? All right. Or can you do without it, and you just would rather me go to the majors and skip it? All right. Let me know. I'd like to get some feedback on this. All right. Because I don't want to waste my time or yours. Okay. So we'll see you in the next video. Thank you very much.